I'm here with Remco Westermann, the CEO of Media and Games Invest, who announced an acquisition just a few days ago. How are you, Remco?
Yeah, I'm fine. Good morning.
Good morning. Now, of course, we're going to dive into this acquisition. It's AxesInMotion. It's a developer and publisher of mobile games. It had a notable margin, 60% margin. What can you give us an overview of the deal parameters?
Yeah, I can, of course. Yeah, it's a cool company. They're based in Spain. They specialized in racing games, mobile racing games, so actual racing games, with over 700 million downloads, so really a very substantial gaming company. Roughly 30 employees, and just to give also some financial data, they did 7.9 million revenues with a 5.1 million adjusted EBITDA, so that's really over 60% EBITDA. But even more important, they are growing very strongly. So they have a 36% organic growth CAGR from 2018 onwards. And we're getting it for really good price, fair price, I would say, 55 million fixed and an earnout of up to 110 million. But for that, of course, also the EBITDA has to grow and the company has to continue to grow. That's, in a nutshell, AxesInMotion.
So those are impressive numbers. It sounds like a great company, but why is this such a good fit for you?
Yeah, it fits our strategy. As we had in our last presentation, we are, let's say, big believers in the flywheel. And the flywheel consists of a media part, an advertising part, basically, of own content and of data. And the combination of the three really makes a very strong combination because each of the three parts enforces each other. And with this acquisition, we first of all have a strong synergy potential for the company itself. So that means that we can grow the revenues from AxesInMotion by selling their ads better, so getting a better fill rate and higher CPMs. That is something we can push via the media side, but also getting stronger user acquisition, so acquire users more, faster, cheaper. So that's a very important point. And this acquisition also strengthens the media part because with this we have more good ad spaces where we can guarantee that they're good, that there's no fraud, all these kind of things, where we have view, of course, of who are the users of those, or let's say who are seeing the ad. And that makes, of course, our media side a lot stronger. And that's, especially in a world where identifiers are disappearing, something that's really very much looked into. How good is the quality of ads that you can serve, or how many data do you have? And also with this data, we can feed our AI routines, so artificial intelligence routines, which again makes the quality better. And that attracts more advertisers for the media part, and more advertisers again attracts more publishers. So in that sense, you really get the flywheel going round.
Yeah, we're going to dive more into the financials and trying to dig deeper into the actual synergies of this company shortly. But I wanted to ask you, am I right in assuming that there are going to be further acquisitions in this sector with mobile developing and publishing companies?
Yeah, we are a company that is next to our strong organic growth, also further doing acquisitions. I mean, we have a buy and build strategy, so acquisitions are part of the story. And we see that with acquisitions, we really get a lot of synergies and leverage, so it makes sense. We are basically looking into two directions for acquisitions. The one is further mobile game companies, indeed. And the second point is media companies, also to strengthen some parts where we're still missing some technology pieces, or also to get critical mass. So basically, in those two fields, we are looking for further acquisitions. And time for acquisitions is good at the moment.
So talking about the strategies, so far you've kind of refrained from developing your own games. Will this change with this acquisition?
Yeah, so far we were, let's say, mostly focused on MMOs. And as part of the flywheel strategy, we're more shifting our focus more to mobile games. And there's a huge difference between game development between the two. If you go for MMOs, developing an MMO costs at least 10 million, if not 20 million or more. And we all know that let's say, launching games is risky. So for a proper game development strategy with MMOs, you need to develop, let's say you need to launch 10 games per year, 3 years development time. So you need to develop 30 games times 20 million. That's a huge invest. And that's an invest that we think is too high for us in comparison to our company size. If you now look at mobile games, developing mobile games is much less cost intense. It's much easier to also work with prototypes, so quick prototypes. And that's what AxesInMotion is doing. They are launching prototypes, see if there's good response, and only if there's good responses, they start to develop the game. So they're really experienced in game development, which is also, of course, a very important factor. So with the acquisition of AxesInMotion, we will indeed get into game development, but really with an emphasis on mobile game development.
Now, I already know that you've said that this is a good price for AxesInMotion, but you're paying around, is it 9x EBITDA? Could you explain further why this is a good price?
It's a good price compared to where the market comes from. Valuations for mobile game companies were like 20 times EV/EBITDA or even higher in the past. And we had, of course, a few things that happened. First, we had COVID, and then people selling their company were even more bullish on the pricing. Then COVID was over, then identifiers disappearing out of the market. So there are a lot of shifts. Now capital markets getting under pressure. So from a seller's market, we have moved into, I would say, a buyer's market. And that makes, of course, negotiations a lot easier. And we're really happy with this multiple, where I have to also emphasize that part of the low multiple has also to do with the synergies. We were very fast in exclusivity with AxesInMotion because they really like our media part. And with the media part, we can let the company grow much faster. And part of this faster growth will also land in their pocket. So there's a real win-win in this situation. So let's say part of the low multiple is really the market, but part of it is also our setting, which is really unique compared to our peers with having this media part.
And how are you financing the acquisition?
Yeah, we did a capital increase. And I have to say a few words about it because it was a long discussion that we had internally. We have a lot of cash in the bank, so we had over 200 million by the end of the year. And we could have financed the whole acquisition with our own cash, but we are in different market situation at the moment. The capital markets have come down. People are really, look at our share price, which held pretty well compared to our peers, but also we went down substantially. And if you then look at what is being punished in the capital markets at the moment, that is, for example, leverage. And so that's the reason that we had, even though we would have had the cash to pay it fully, and even though we don't like to dilute our investors, because we know at this low share price, it really feels, it hurts, sorry, it doesn't feel good. So in that sense, it was a difficult decision for us, but we said, okay, let's not increase the risk of the company. Let's keep the leverage at the level where it is, or even get it a little bit lower. And that's the reason that we decided to finance part of the purchase price with a capital increase. So 30 million out of the 55 million is a capital increase. And we were really happy that we're in this market, that we were able to place the money, and even with a low rebate.
I'm glad you went there because we had a question just asking that why would you do a share issue instead of just using your own cash. So let's move on to the share issue. It's usually an indicator of how the market is and the interest for media games invest when you put up an offer like that. And it's been a stressed market. It's been rate hikes and it's been geopolitical worry with the war ongoing in Europe. How would you say it was received?
Yeah, indeed. What you say is right. The world has changed dramatically in the last, I would say, half year, where also the capital markets were very bullish still only half a year ago, and where everything has changed. The war has even made it worse, but also the risk of interest increases, of even getting into a recession. So capital markets are really nervous at the moment. And I'm really happy, and I think it's a really good signal that we were able to raise this money. We were 50% oversubscribed, which is in this market, of course, also very good. We were able to place it with only 5% rebate, which is really which is a rebate that you normally give in almost normal times and not in this kind of stressy times. But I have to really thank our strong investor base that were really on board. Most of our long-only investors really signed up for the deal. They came in, and we got some new investors also getting into the deal. So I'm really happy. It shows that the investors are really rating our model highly, even though we all know that the share price is under pressure, like the whole market.
Yeah, they do love you here in Stockholm. You have a lot of shareholders, and they're mostly very active. So that's why I want to take this opportunity while I have you on link as well to ask a completely different question. We've gotten some viewer questions asking about the position that you have in another listed company called EG7. Can you give us an update on that position and the future strategy?
Yeah, nothing has changed on the position, so we still hold 8%. We're also not planning to extend the position, and we are watching the current how the market is developing. I mean, they have a bit of issues with their Russian asset. We think that there's still much more value in the company than what they show at the moment. But for the rest, yeah, we are watching the situation, also capital markets. But there are at the moment, if you look around in the market, much more attractive acquisition opportunities than an EG7. But it all depends, of course, how markets further develop. But at the moment, no plans to further extend our position there. And yeah, rather looking at other targets that fit our strategy. Because the one thing, EG7 is not very strong on mobile gaming, and that's, as said before, the point that we are looking more into. On the other hand, also, let's say we think that the company has a bit more value than what we see currently at the stock market.
Remco, I wanted to ask you one last question that just popped up as well. They want to know a bit more about who were in this share issue, who took large positions. Are there any existing shareholders, or is it mostly new, or is it spread? What can you tell us?
No, the majority was existing shareholders that took stakes, and really happy to see larger shareholders like an Oaktree. Really, they wanted actually much more than we gave them in this share increase. But also, yeah, there is a stable shareholder base in this company. That's really very good to see that. But as said, we also let in new investors. And yeah, it was oversubscribed, so we were also able to. There are always people subscribing, like more hedge fund kind of type, which we also like, but of course that are, let's say, getting more volatility in the share price. So we were able to really do the placement almost completely with long-term investors.
Remco, thank you so much for tuning in, giving us this time and teaching us about this acquisition. Good luck moving forward.
Thank you very much, and looking forward to our next interview. Thanks.